Anytime we play the Rolling Stones, I just hope my mom is listening. She's got the Rolling Stones tattoo on her ankle, and she just must get all excited.
We saw the Rolling Stones at the Super Bowl when the Hawks were there in Detroit.
That's right, we did. That was like one of my 7 times seeing them. I'm probably the youngest guy in the world who's seen the Rolling Stones 7 times.
Wow.
Yeah.
7 times, huh?
Yeah, I include the Super Bowl three song show as one of them.
Okay.
But anyways.
Sounds good.
Ryan Leopold's back with us. It's Monday, so, we have some mortgage data and news for you. So, Ryan, we've talked a lot about how difficult people think it is to get a loan, although it isn't really hard to get the financing. It might be a lot of paperwork. But there's kind of this perfect loan file that we're looking for, that banks are looking for, and actually the end owner of the paper, the loan, the mortgage, who's actually giving people the money, is looking for. Let's talk a little bit about, why we need all this documentation, because I think for first-time home buyers, although it's sometimes hard to remember because we do this every day, it is a big step. You are opening up yourself to maybe some scrutiny, but it's your entire financial life that has to be documented.
Yeah, and I think we've kind of exhausted the topic over the last couple of weeks, talking about interest rate, exhausted that, how low interest rates are. We've exhausted what lenders need to get somebody pre-approved. But now we're kind of in this next phase of really going into detail of what a perfect file looks like to a lender and really why they're requiring a perfect file. And this is for everybody. I think the biggest point that I try to make with clients and really want to make clear today is this is every lender. 95% of all loans that originated through basically every bank, we'll talk about that exception in a second, and every small broker, every small correspondent lender gets sold to Fannie Mae, Freddie Mac, or FHA or VA. So everybody goes off the exact same guidelines.
And so those same guidelines, whatever bank you go to, it's all with the same necessary paperwork. It's the same necessary credit scores. I mean, essentially. Yeah.
So I think, the foundation of what a borrower needs to get approved for financing is always the same, credit, income and a job, and assets for a down payment. But once you get into detail as far as what a loan application needs to look like, the details of those documents, what they need to look like, the details really are what makes a perfect loan file. And a perfect loan file is a sellable product for a bank or a lender or a broker or anyone else. So I think it's important that consumers understand that it's not necessarily a bank that's going to own your loan in the future. It's owned by Fannie Mae, Freddie Mac, FHA, or VA. So these banks originate your loan and they sell that loan to those correspondents. So that way they get their money back. So if they originate a $250,000 loan, for example, they hold it for 2 to 4 weeks and then they sell it back to Fannie Mae and Freddie Mac for a profit. And then they get their $250,000 back. They can now relend to the next person. So if they originate a file that's not done perfect, that opens the door up for Fannie Mae and Freddie Mac to come back and make that originator of that loan buy back that $250,000 loan. And they're just not in the business of owning $250,000 notes.
No, I mean, it's big. It's big, and that's why you have these huge bond companies. I mean, something like $3 trillion of bonds that back these. Okay, what does a perfect file look like then? I mean, let's go through that a little bit.
Okay, so some major areas where I think the best way to answer that is the areas that create confusion or frustration for a borrower. So you're going to have your normal loan application, and every little detail of that application has to be complete. Current address, past address, how many kids you have, what accounts do you have, what kind of assets do you have as far as cars and their value. When you pull a credit report, they want to know exactly, documenting every address you've ever lived at, every inquiry you've ever made on a credit report. When they look at the asset statements, they want to know every single deposit that's ever being made that's outside of your traditional deposits. They want to know where those came from. When it comes to actually getting documentation, they want every single page and every detail.
And this is why everything's taking longer.
It's taking longer because you have to go through the process of a loan originator like us. We originate a loan. We sit down with pre-approve a client. And we get as much documentation as we can. So we expose, like you talked about at the beginning, it's kind of exposing their whole financial life right now. And then you got to go through it like 2 or 3 other times throughout the process of the transaction. So I think the biggest challenge that buyers make these days is when they fight what lenders need. Every lender is going to need the same stuff. everybody. So as I was doing a little research on this topic, there's a great article in Forbes magazine that talked about the perfect loan file and why lenders need these. And then I did a little more research, and there's a really great blog out there by a lender from the East Coast that said, they titled their blog, "Because I Said So." And the whole theory of when you ask mom and dad for something, they say no, and you ask why, and it's because I said so. We need all these things because we need them. So let's just get them up front, and you're going to have a better experience if you don't fight it and just work with your lender throughout the process, as opposed to saying, I don't understand why you need that, and questioning every piece. Because I said so. Because we're going to need it. Everybody.
Doesn't that sound good if you can just say that to your clients? Well, I just said so. But there's
this article now from now on.
But there's some truth to it, because there's just too much. There's too much risk, and that's, granted, the pendulum has swung the other way, but that's kind of how when everything was underdocumented 4 years ago, 5 years ago, 6 years ago, 7 years ago, that's how we ended up with this in the first place. So, for the people who got stated income, stated asset loans and just had to sign their name, that's, I think, sometimes it's who it's the hardest for, is people who've gone through this process before, and then it's really, I don't understand why you need all this again.
It really is. I mean, that is the biggest challenge we face every day is, when people have gone through before and they didn't need all this stuff. But again, such the layering when it comes to processing, underwriting, and getting loans closed, and it's true. It's not that it's tougher to get a loan these days necessarily. It's to actually get a loan closed and sold is really the biggest challenge, and that's what's putting pressure on lenders at every level.
We're here with Ryan Leopold with Cobalt Mortgage. Ryan, we just have about a minute left before we have to go to break. But I wanted to, the perfect loan is definitely, it's a big piece of this. But I wanted to go back to what David had talked about just real briefly about, when a client comes in and they're asking about rate. I kind of equate it to trying to buy a stock for as little as possible. So you call every stockbroker in town, yet now you realize, and that would be if you didn't know stock prices changed all the time. Mm-hmm. And now, of course, you have the ticker that goes on, 400 different channels, I suppose, and every website around. But that's kind of what it is like, trying to find a mortgage, and rates change all the time. So, you can't call your stockbroker before you're ready to buy the stock and just keep pricing it out every single place.
Well, the media doesn't really help with that either. So I had a client over the weekend who's doing a refinance, a HARP refinance, which is unique in its own right. And they saw an interest rate in the media that was an eighth lower than what we had for him. So she emails me, which is no fault of her own. It just comes through information and education. She emails me because she goes, I saw XX rate on so-and-so newscast. I want that. Thank you. And that's not quite how it works. It's about understanding kind of the options. And like you said before, the costs associated with getting a certain rate based on everyone's unique situation, which, again, everybody's different.
There was actually something that just came out on from the Arizona Mortgage Broker Association that talked about if lenders are actually because you can get different rates. Mm-hmm. If lenders are charging for service, or if they're just trying to get the best rate out there, and they're not worried about if it closes. And so they talked about the cost of different loans and what it takes to process them, and if there's more manpower and whatnot. It's an interesting article that we can also post. So it comes down to that service that you want to.
Well, the last thought on that is when you're in a tough real estate market, and a tight real estate market today, where getting a property under contract is a little bit tougher than it used to be. When you have 30 days to close a loan, the last thing you kind of want to mess with is working with a lender who can't actually get your dream home closed.
That's true. Hey, Ryan, we have to go to break. When we come back, Dave Duncan, David Bell are both going to join us. We're going to let you know where we think the real estate market is going. That was Ryan Leopold. You're listening to Brashenomics.